uh, our partners who have made this possible, the European Union, the Organization of African, Caribbean, and Pacific States, the GIZ MoveCom Cashew, USAID, Sustainable Nuts Initiative, SNI, Cashew Info, and then Internet. So now I think it is time to introduce Jim Fitzpatrick, expert of many years and actually always supporting us to analyze and bring to you all this brilliant information on the market. Let me quickly add that you are at liberty to use the charts that we are presenting here. And the only thing for you to do is to acknowledge that the source is the Global Markets Encounter, so that at least if there are any issues, we can also speak to it. Finally, let me also remind you that the ACA annual conference, which is coming up in Ouagadougou, Burkina Faso, is really underway. Registration is ongoing, and remember and save the date. It is between 16th and 19th of September 2024. The actual dates for the conference will be 17th, 18th, and 19th. So at this moment, I would like to invite Jim Fitzpatrick, who is ready and patiently waiting to take us through today's episode of the Global Markets Encounter. Hi, Jim, how are you doing?
Ernest, how are you? Good to see you again.
Thank you very much. So please, the participants are ready and the floor is yours.
Welcome, everyone. 2 weeks on, it's good to be with you again. Let's have a look at what's been happening in the cashew world over those 2 weeks. We're going to start today by having a look at, as usual, the harvests, progress, and the markets. Our analysis section this week is going to be cashew demand and prices, and how does demand react to changes in price? How does price volatility affect the supply chain balance in the cashew market? Our country profile will be Benin, cashew producing country in West Africa, which I'm sure you're familiar with. And our sustainability section will be asking the question, is organic cashew production the answer to the problem of sustainability? After all of that, there'll be plenty of time, as Ernest was saying, for questions and answers if you have any, and we're always delighted to hear your comments. So feel free, type into the chat, raise your hand, let's have a conversation about cashews. Let me remind you that all of these GMEs are available on YouTube. The recordings of each and every one of the 64 editions will be available probably from tomorrow. So you can look at those anytime. They're there for, well, as long as YouTube allows them to be there. Okay, let's move on and get into the content of our session today. We'll start with the production update, and we'll start as usual in Asia. So first of all, let's have a look at the situation in Cambodia. It has changed in terms of its emphasis over the past few weeks. We started the year back in February with a really positive forecast from the Cambodian Cashew Association and others. That has eased as the year goes on, and it now looks more and more likely that the crop we will have this year will be more like the crop we had last year than the 1 million tons that was forecast back in February. There is strong buying from Vietnam, as you would expect. There is particularly strong buying for larger cashew nuts, so that's stimulating demand in Cambodia, where the nuts are tending to be larger than elsewhere. Farm gate prices are steady. They have actually increased after a dip. Early in the season, prices have picked up again. But what we do notice is that there's more variation on quality and price. So higher prices for higher quality, especially larger nuts, and slightly lower prices for the lower quality varieties. The crop is flowing, and I think we're probably looking at a situation where we have a crop something like last year. It may be of slightly lower average quality and slightly lower average outturn. but we won't really know that until we get into May. In Vietnam, it's no secret, I think, now that the crop is lower than hoped for or lower than expected. We've seen a really strong trade in kernels from Vietnam in the first quarter of 2024. More on that later. And Vietnamese processors have been, I would say, more conservative this year on RCN buying, focusing more on Cambodia in the early part of the season, probably in a more reasoned and organized fashion. And more on that later too. In India, it's still quite early, huge area of cashew production. There are some reports of the hot weather damaging flowering. Some of those are a few weeks back, some of them are current, but I don't see any indications of any real problems so far. But let me add the note of caution. It is quite early in India. It does take a long time for these reports to work their way back into the market. So we would still have a certain reservation on what's happening in India. The forecast, the official forecast, 782,000 tonnes. I still think that might be a little bit optimistic. Cashews are really flowing in West Africa, so let's have a look at the situation there, and we'll start with the world's largest producer. Certainly the crop is later than usual. The second crop is behind a couple of weeks, just as the first crop was. There are a lot of reports of a short crop, but on the other hand, the prices, especially at the farm gate, and the volumes so far do not really confirm that there's a major problem of any sort in Côte d'Ivoire. Let's not forget, at this time of year, there is a game going on between the exporters, the traders, and the processors in Asia on price, and that influences a lot of the information that comes out. Unfortunately, we have often a vacuum of information from official sources, and into a vacuum flows all kinds of rumor and speculation. In Côte d'Ivoire, we're still seeing intervention by regulators, intervention to buy on behalf of so-called national processors, interventions to support the farm gate price, or at least asking exporters and traders to provide evidence that they've paid the minimum price. That's difficult. It has slowed to a certain extent the export of raw cashew nuts. Slowing the export actually impacts the farm gate price. So if you slow the export to make sure the minimum price was paid, you actually make it less likely that the minimum price would be paid. And that's a real difficulty for regulators whose interventions are certainly well intentioned. We have to say at this stage that a late crop does not equal a poor crop. We cannot reach that conclusion, at least yet. We'll have to wait another couple of weeks to see how things progress. So a lot of questions. My own opinion, I think the crop in Côte d'Ivoire will be a little bit lower than last year, but I don't think we're talking about any kind of major problem as far as I can see. Moving to Nigeria, I suppose at this stage the best we can say is that the best expectation is an average crop. The hot and dry weather has had an impact in Nigeria. It's also impacting quality. So impacting quality also impacts farm gate prices. So we see farm gate prices stable, maybe a touch softer. Whether that's related to lower quality or whether it's related to greater availability remains to be seen. But certainly prices have eased back a little bit. And in Nigeria, there's a great deal of volatility created by the currency volatility and foreign exchange rates. So we need to watch there. My guess is Nigerian crop, maybe I'm a little optimistic, but Nigerian crop around about let's say the average 240 to 250,000 tons RCN basis. In Ghana, we think now that the crop is unlikely to reach those probably optimistic official forecasts around about the 230,000 tons. Again, as in everywhere across this region, the crop is late. Perhaps in Ghana, it's drifted on a little bit longer than might be expected. You'd expect the Ghanaian crop to come in a little bit earlier than Côte d'Ivoire, for example. So perhaps there is a signal of a smaller crop in Ghana, a greater signal than in Côte d'Ivoire, for example. In Benin, again, I have less information on the ground in Benin, but there is certainly concern on the size of the crop. The export ban is in place. It was officially again put in place on the 1st of April. And the situation is that until processors are covered, the Ministry of Trade will not allow the export of raw cashew nuts officially. There being more production than there is processing, that's led to a pretty strong cross-border trade. And we'll talk a bit more about Benin later on, as that's the country profile that we're doing today. Burkina Faso, again, difficult to ascertain the exact situation on the ground. It looks like production may be impacted by the weather and, of course, by the politics, but I don't think we're, again, looking at a major problem. Moving further west, and we have a look at Senegal, the Gambia, and Guinea-Bissau. Still early days there. Farm gate prices in Guinea-Bissau, initial minimum 300 CFA per kilo. Initially, that looks okay if you just compare it to farm gate prices elsewhere. Farm gate prices in Cote d'Ivoire between 275 and 300 CFA, 320 to 350 in Benin. So 300 in Guinea-Bissau doesn't sound unreasonable. Unfortunately, the costs structure in Guinea-Bissau is much higher. The level of taxation is higher. And despite government changes and a reduction in the tax take, at least on paper, it looks like that calculation is difficult again for the export trade. We might again see large cross-border trade, primarily into Senegal, and certainly traders in Ziguinchor are gearing up for large volumes, just as we saw last year. Now, the government in Bissau has said they will look at greater enforcement issues this year, but that is really challenging. It's very difficult to do that, and it's particularly difficult to do it when farmers are receiving better prices through the smuggling and the cross-border trade than they are through the official trade. And we all know that farmers in Guinea-Bissau highly depend on cashews for their livelihood. So key points on harvest and production. West Africa, the crop's late. The risk of a problem is increased by that lateness, but it's too early to make an absolute conclusion on that. Production worldwide, in my opinion, may be less than last year, based on the latest forecasts, but only marginally so. And if we take that and put it together with consumption, we still think that there's somewhere between a 2 and 3% oversupply, plus whatever carry-in came into the year. That would mean that the surplus is at least lower by half than it was last year, as the carry-in is far less this year than it was last year, particularly the carry-in of raw cashew nuts stored in Vietnam and cashew kernels stored in India. Early 23, this was a big issue on the market. That issue has been absorbed in the course of 2023. So still a surplus, but much less than last year. We'll have a look at some prices and markets, and we'll have a look at some of the market indicator trends. If we look at the farm gate prices, and we're talking now right across the world, steady to softish, I would say. Again, let's not forget that farm gate prices are influenced by quality as well as by supply and demand. So if we see softer prices, it could easily be due to a lower quality, and that's quite likely, especially in West Africa. Arrivals are slow, and again, there's a possible problem, but it's far too early to draw conclusions on that. If we look at the international raw cashew nut market, we see in the last week that having dropped off, prices have again steadied, mostly on rumors of major crop problems. Buyers generally are being cautious. Vietnamese buyers are rightly taking advantage of the supplies from Cambodia and taking their time entering the international market. and that's keeping prices somewhat under control. I don't see any room for any kind of a speculation, at least a logical speculation, evolving in the current situation, but never rule that out in the cashew market. If we look at kernels, the kernel market is much livelier now than it has been. There's more trade, there's more buying interest, especially for forward positions, which is an indicator that A, inventories are under control, or at least more under control, and B, that there is confidence amongst buyers for demand for 2024. And one thing that's noticeable is this gap between the small sellers who tend to sell prompt and spot and the bigger sellers who tend to sell forward. And effectively what that means is the gap between those who have to sell now and those who have a choice, whether they sell now or sell forward, has widened. And that tends to be a slightly bullish indicator for kernels prices. Looking at downstream demand, what we see is very strong export from Vietnam and a lot more forward inquiries. And those are key things. What we don't really see is the lower prices that have been with us now for about 18 months being passed on at retail level in Western markets. So that's likely to keep demand growth fairly muted. Let's have a look at those Vietnamese exports. So Q1 exports 2024 from Vietnam, and remember Vietnam supplies about 80% of the world's exports. Well, exports from Vietnam are up by 35% on last year, and last year was the largest year on record for exports from Vietnam. So in this chart you have the lines, or the cumulative exports from Vietnam building up during the year 2021, 2022 and 2023. The bars are the cumulative monthly exports in 2024. So January plus February, January plus February plus March, 151,000 tons almost exported compared to 111,000 tons last year. This is truly remarkable, particularly following on from a bumper year like last year. So I thought we should take a look at the various regions and picked out, again, looking at exports from Vietnam. So we're looking at Q1, January, February and March combined, into various regions. So we had a look, and I took East Asia. So this is the major East Asian importers of cashew kernels, excluding China. And we find that exports are up by 33% on last year. Middle East and North Africa, looking at the top 6 countries. So this would include Saudi Arabia, United Arab Emirates, it would include Iraq, and it would include Israel, major markets. If we look at those, exports from Vietnam are up by 22%. All of these figures are on volumes, by the way, not on values. In Europe, the top 9, including the biggest importers, the Netherlands, Germany, the UK, France and Spain and Italy. We see quite a good increase there too. It's 25% up on last year. None of those figures are particularly surprising given the performance in the second half of 2023. But the US was pretty much in the doldrums again last year. A little bit better in the second half, but generally speaking, the impact of lower prices in the US market hadn't been seen, but it may be happening now. Exports are up 37%. Now we should probably place a little bit of caution around the Europe and the US figures, especially the US figures, because there may have been in January an emphasis on getting shipments out early, fearing further freight disruptions, and of course that proved to be correct, with voyage times and voyage costs increasing due to disruption around the Suez Canal. However, if we look at the March figures, given that that is already known, they have continued to stay up. So there could be two things going on here. There could be a big spike in demand again, which would be highly positive for the year ahead. But there could also be something of an acceleration of shipments in the course of the year in order to allow for longer journey times. Now, we don't know to what extent that's a factor, but we should also bear in mind that American buyers have the option of shipping through the West Coast, avoiding the problem. And I think, therefore, that we probably are seeing a spike, an increase, and an improvement in imports, both in Europe and in North America. And finally, China, and this is the most remarkable figure. Again, China has increased its purchases from Vietnam. Trade in the first quarter was double trade in the first quarter of 2023. Now, if that was just in January, I'd be saying, okay, maybe it's to do with the festival period, Chinese New Year, but it's actually accelerated into March. So it does look as if there's something going on cashew demand in China. Now, all of these numbers are just for the first quarter, so we have to be careful what conclusions we draw. But what we can say is that it is clearing out whatever stock remains in Vietnam. There is a tightness on kernels in Vietnam for prompt and spot. That is in contrast to the strong availability of raw cashew nuts right now from Cambodia, and hopefully as time goes on from West Africa too. But certainly positive signs and indications that that might assist kernels prices as the year goes on. Still on the subject of Vietnam, you might recall if you were with us 2 weeks ago, we talked about Vietnam's cashew conundrum and the potential responses to the difficulties in Vietnam. We talked about the rising supply chain costs, the spread of technology to competing countries, and this phenomenon of low prices and in some markets lower quality. Well, there was a meeting recently of the Binwak Cashew Association to discuss some of the strategic options, and I read the reports. I've included the link to the report. It's on the VitaCast website if you'd like to read it for yourself. But basically, the options proposed during that meeting were an increase in the price of cashew kernels, which makes sense if you're the dominant supplier. I mentioned 80% of world's exports a few minutes ago. If you're the dominant supplier and prices are too low, well, one solution is to increase prices if you can get people to work together. More problematic, I think, is pressurizing RCN price by reducing purchases. So that's a difficult one, because if you don't buy and you're highly dependent on imports, you will eventually run into a situation where you don't have enough supply. So the ability to press RCN prices by buying less is very limited. The ability to buy RCN in a more organized fashion makes a lot of sense, if that can be done. In other words, not necessarily to undervalue the product, but to stop speculation spiraling the product out of control. And that did happen. If we go back to 2017, that's exactly what happened. And as we know, prices ended up above $2,000 a ton for raw cashew nuts at that time. The third strategic option was suggested to add more value, concentrate on higher value added products. That's already happening amongst major processors in Vietnam. It makes a lot of sense, and we've spoken about it on this forum over the last 2 years. And finally, and I think this is the essential aspect to make the other three work, is for the cashew sector and processors, particularly in Vietnam, to unite and work together. Now, that's a really interesting article. It gives a signal that the Vietnamese cashew sector is looking to improve its position, is realistic, and is maybe moving away from the idea that market domination through low prices is the way forward. Speaking of prices, our analysis section today is about demand and kernels prices, how one affects the other. I hope you like charts and numbers, because there's quite a few coming up right now. We see a lot of analysis and a lot of expensive reports suggesting that cashew demand is likely to continue to grow. These are usually based on current trends, especially based on consumer trends. So natural foods, healthy foods, convenience, all of these factors. And there's no doubt that these are huge factors in the development of demand for cashews over the last 20 years. But those reports rarely focus on how prices might influence the speed of demand growth, and focus on that particularly, the speed of demand growth. So we thought we'd look at these three questions. What is the relationship between prices and demand growth? Does it differ from market to market? So is the relationship different, for example, in China to the US, to Europe, to the Middle East? And what do the trends that we find suggest for 2024 and indeed beyond 2024? We're going to do this through a series of charts. The first one, if you've been with us before, you're pretty familiar with. So this is our just over 20 years price chart. It's got two trends on it. It's got a moving average 18 months trend, and it's got a simple linear trend outlined on it. Let's first of all put these prices in context. So first of all, we always use 320 as the largest single grade produced and the key grade in the snack food sector, where most cashews are used, particularly outside of India. If we were to do a more detailed analysis, and there is a good argument for that, I think, we might consider a composite price based on outturn yields, taking into account the major brokens and more whole grades. But for the purposes of this analysis, it's simply 320s, which is always a pretty good reference point based on its outturn and based on applications for cashew kernels. So where are we today? Well, we're at the same level that we were back in July of 2009 in terms of the simple price. We're just off the lows of the year, but not much. I take in this, I don't take the lowest price. I take the lowest priced origin, but the top processors from that origin. And that's done in order to avoid distressed sellers, spot sellers, prompt sellers, or the opposite side where buyers are squeezed for supply in the short term and the spot market is higher than it should be. So it's W320s, WW320s. It's 3 months forward. It's the lowest price origin, but the best processors from that origin. So it's usually FOB Vietnam. Certainly in the last 10 years, it's almost always been FOB Vietnam. So we look at current prices and we look at the linear trend. So if we look simply at the linear trend, it would tell us, a bit crazy of course, but it would tell us that 320s are undervalued by about $1 a pound, which obviously isn't true. If we look at the moving average, probably more accurately, it tells us that 320s still undervalued, but by much less, probably 15 to 20 cents a pound. That's just based on what's happened in the past being an indicator of what might happen in the future. Now we know that's not always 100% valid, but it is an indicator and it helps us to put prices in context. Let's look a little deeper into this. Let's look a little bit deeper for the context of prices. So in this chart, this is a much shorter period, April 16 until April 24. Again, we're going to look at 320s, the red dotted line, again on the same basis as I've explained. And again, we have the moving average. Now this time it's a 24 months moving average. Doesn't change the trend very much actually. What are the average prices? So I always use a 2-year average price because I think that 2 years is about the time it takes for very low or very high prices to impact back into demand at the basic consumer level, particularly in organized markets. So the average price over the last years is $2.58 per pound FOB. We're below that at the moment, but only slightly below it. The high over that period, the average high is $2.85 and the low is $2.40. So there's the range of prices, $2.40. Now you can say, Jim, look, somebody sold at $2.30. That's fine. But bear in mind, again, we're talking about top processors, 3 months forward, lowest priced origin. So if someone in West Africa sells at $2.70, or someone in Vietnam sells for shipment next week at $2.30, they're not really in the parameters of this type of analysis. We do that in order to take out some of the distortions. So where are prices now? So we're 3% below the 2-year average. We're 12% below the 2-year high, and we're 4% above the 2-year low. So we're now looking at a situation where prices are in a mid-range of the 2-year trend. Now remember, the 2 years in question takes into account 2023, which was a disappointing year for demand in the West, particularly the first half, second half 22, first half 23, disappointing in the West. 2023, very encouraging for demand in Asia, very encouraging for demand in India. Middle East was strong in Asia, China was very strong in Asia. North America was quiet. Europe was really coming back last year after a poor second half of 2022. So if we look at this 24-month trend and where it is, it's signaling to us that there is likely to be something of a breakout, that the market price is likely to head back up towards this level, probably somewhere between the average and the high on what we can see. So the moving average is telling us, again, that in an analysis over the last 2 years, based on the trend from April 16 through to April 24, that we're looking at slightly undervalued kernels. Now, when I say slightly, what we're talking about is somewhere between 3 and 12% undervalued. So if you were an investor, for example, I know you're not, but if you were an investor and you were looking at this, you'd probably set a target going into the market now, and maybe a target to get out somewhere between $2.65 and $2.75, if that were to happen. So that's just to put prices in some sort of context for us for the rest of the discussion. Let's have a look at demand, and let's have a look at how demand has behaved over the last 14 years or so. As you can see, it's been pretty positive all the way. Only in 2020 and in 2011 have we seen dips in overall consumption of kernels. In fact, in the last 10 years, overall consumption or demand has risen by 48%. That is really strong performance. Now, the dips in that period were due to certain crises. COVID, war and inflation in 2022 and 2023. So Russia invaded Ukraine in February 2022. COVID really got to grips with the world January, February 2020, and its impact was felt globally by April, May 2020. So this has obviously got a big impact. If we go back, we see post-financial crisis, way back in 2010-11, similar though much more limited impact. Of course, at that time, demand was much lower too. Let's look at growth in those periods. So the growth in consumption worldwide over that period, 2019, the 5 years to 2023, has been about 3.2% per annum. That followed on from a period between 2015 and 2019 when growth was actually slower at under 3%. And that followed a period of 5 years from 2011, when demand had dipped, through to 2015, when we saw a remarkable 9% per annum growth. So the good news is that demand has doubled since 2010, that it's grown by 48% since 2015, which indicates an acceleration, but most of that was happening in the early part of the period. Demand slowed, and now we need to look at why did those events happen? Why did demand slow down, or demand growth slow down, and what does that mean for the future? So let's have another look at demand, and this time let's superimpose over the demand the prices during the periods. So each one of those red lines represents the price high in that calendar year, the average price in that calendar year, and the low price in that calendar year. Now, what it doesn't indicate, of course, is whether the low was at the beginning of the year or the end of the year. And that too has an impact. So let's have a look at this period, first of all, when prices were relatively stable and demand growth was very quick. This period, 2012 through to 2015 particularly. And during that period, we saw a strong growth in demand, 9% growth per annum in demand worldwide over that period. Faster some places than others, but nonetheless, on average, 9%, absolutely remarkable rate of growth. And that was during a period when prices were much higher than today's level. Average prices 336, 327, 330, 343. Then we look at the period of the, as I call it, the big price bubble, 2016 through to 2018. In that period, prices started at 350, they hit 520, and they slipped back to 340. And during that triangle, demand growth essentially collapsed in one sense. But 2.86 is not a bad performance. This is a key thing to remember, that we talk about 9 versus 2.86. But if we look at 2.86 overall, that's not a bad performance. Let's look at the third period, which is a more recent period, where we're looking at much lower price levels. So prices, the low at $2.40 compared to the low in this period of $3.10, in this period of $3.40. And in the interim, the lowest was $2.75, but much higher price levels. So in this period of lower prices, despite COVID, despite inflation, despite Russia's war on Ukraine, we see a faster rate of growth, 3.8%. So it's quite interesting to note that in this period of multiple crises, that demand actually grew more quickly than it did in the period of high prices. So when we look at it, we see that in the period of price volatility and very high prices, the growth in demand reduced by 70%. But in the period of crisis and very low prices, the difference between that and the high price period was only about 11%. That's the difference between 2.86 and 3.18. So it's quite interesting to note that the difference between the price bubble period with lots of uncertainty on price, very high prices, and the post-COVID period, which again is a period that we might call a period of uncertainty in some ways, the difference in growth rates is only about 11%. I wonder what conclusions we could draw from that. So we might say that there's two possible conclusions here, and that is that these lower prices that we've seen over the last 3 years have very little impact, or they've not yet impacted. So that's something we need to look at. Have these low prices impacted on demand and not really made a difference? Or maybe there's a difference between different markets. So I thought, okay, our next logical step, keep our price charts, high, low, average, year by year, and have a look at the speed at which demand grew or fell during that period. So each one of these means, so we go back here, back to the start, 2010. That means from 29 to 2010, demand grew by 1.55%. And then between 2010 and the end of 2011, demand fell back by 1.97%. And we can see, if we look at our prices, the trend: price high in 2011, followed by stability, followed by the famous price bubble, followed by a fall again, followed by a period of stability, a 2-year period really now. 18 months to 2 years period of price stability. And what we're seeing in there is that a really unpredictable situation. Yes, definitely, during the period of price stability, demand growth was pretty strong, as we've already said. During the period of price volatility, demand growth slowed down. And then we get into this uncertain period. So 2019, low prices, fast growth in demand. This period here, this is COVID. So in a way, in certain sense, we should disregard this, because certainly markets like India, markets like China were hugely negatively affected in 2020 by lockdowns and inability to distribute product. Less so in the West. In 2021, then we saw a major increase in demand. So all the loss of 2020 was recovered and increased. And then we saw another slump on inflation and COVID. Now, there's a lot of different factors here at play when we look at this. It's not only the absolute level of price, it's not only the low during the year, it's when that happened as well. So buyers will look at 2017, and we will have seen in 2017 prices finished the year very strong. So it started low, finished strong. 2018, on the other hand, started high. So this high was in the early part of the year, finished low. So buyers would have gained confidence that prices were falling away, and that would have given a boost to demand. And that would apply particularly in markets where buyers buy forward. So that would usually be, at that time, Europe and the US, although I understand now that we're seeing far forward buying in China, which is also a very positive factor. So we need to look at markets in terms of different characteristics of different markets. So we decided to do that. Let's have a look, first of all, at the North American market. The largest importing country in the world is the US, and the largest importing market in the world, probably up to this year, is North America. And what we see, so if we look at this, so we have the ups and downs of demand growth worldwide is the black line. The red is the US market, exactly the same calculation, but only applying to the US market. And the dotted line is prices year by year. So these are percentages. The red and black line are percentages, and the dotted line is price per pound. And what we see effectively is that the US market tends to react much more strongly to variations in price. So lower prices and price stability give more growth in the US market than they do in the world average. And the crisis of 2022, so this one changes the scenario. So now we've low prices and a crash in demand. So this looks like it's a much more technical factor related to the US market. And I think that is a reflection of the power of the retailers. In other words, across the United States during 2022, as prices came down for a whole range of nuts, including cashew nuts, but not limited to cashew nuts, retailers failed to reflect those prices back at consumer level. So back in 2012, 13, 14, 15, generally retailers and brands would have promoted their products in periods of low or stable prices, but not in 2022. They maintained high prices and kept them high throughout the period. Consumers reacted. Importers, roasters had imported during 2021 in anticipation of continued high demand. They were caught out and we saw this reaction. So the US market appears to be more sensitive to price. It's slower to impact. It's slower to impact because people buy forward, they carry inventories. It's so-called modern retail, i.e. based on supermarkets. And the power of the retailers has increased hugely during this period. So let's look at Europe. Again, same situation. You see a very similar trend to the United States. But what you see in Europe is that the European market's more to volatility than to the absolute price level. Now, that might mean a couple of things. It might mean that certain buyers are more conservative in Europe. So if we look at this period when there's a big price bubble, growth in Europe starts to fall, but a lot less than the world average. So when the world average growth was 0.11%, Europe grew by 3.85%. In 2018, we saw a reaction in Europe. So the growth was much less than the world average. And that's about a reaction to volatility. It's also about forward buying. So European buyers also buy forward. They have to manage their risk. They have to because the supermarkets insist on buying large quantities for future delivery. And so the European market bounced back very quickly once prices started to moderate and once this price bubble was over. And then we saw very fast growth until the war in Ukraine. And obviously Europe was most impacted by the inflation following the invasion of Ukraine. Until that period, Europe had bounced back very quickly, and again in 2023. So Europe reacts more to volatility than to the absolute price level. We can say that because we know when prices were high, we still had good growth in Europe, but that the volatility discouraged buyers acting in the market, but Europe bounced back quickly, and it's done that twice since 2019. We'll have a look at India. So India is a little bit different. Apart from COVID, essentially steady growth throughout. If you take out that dip, you're looking at a very steady level of growth, regardless of price. Now, these are not the prices in India, of course, these are the prices in the international market. So in India, we're seeing steady growth, less reactive to price, but heavily impacted by COVID. And we're again now seeing, we saw a recovery after COVID, and we're expecting to see steady growth in India. So return to this pattern. I think the average growth in India over 10 years is 4% per annum. The average over 5 is half that. But we would expect to see a return to steady growth. And then we'll have a look finally at Asia. So this is Asia excluding India. So this would include China, it would include all of the Middle East. What we're seeing here is that growth rates are accelerating. We're seeing spikes even during 2021, but the dip during COVID amongst Asian buyers, excluding India, was a better performance than the world market. And in 2023, mostly due to China, we've seen figures off the charts. And I would expect that that's likely to continue to happen in the early part of this year whilst prices remain low. So in Asia, we're seeing growth accelerating. We see that it is sensitive to price, and we see that it was impacted by COVID, but probably less than a market like India was impacted by COVID. So what conclusions can we draw from looking at these figures on price and demand, we can probably say that kernels prices have seen the bottom of the market. But we can also temper that by saying that the upside on prices is limited by the supply-demand balance. In other words, the overall surplus in the market at the moment. We can also say that price changes have different impacts in different markets. It takes longer for a price increase to impact the US market, and the eventual decline in price also takes longer to impact. Europe is more sensitive to volatility. Markets in the Middle East, Asia, including China, tend to react a little bit more quickly. Probably because there isn't as much forward selling and there isn't as much inventory held at forward prices. So we can also say that price volatility, based on what we've been looking at, has a greater impact than the actual price level. So when we look at growth in cashew consumption, even when prices were 3 years at record highs, there was still significant growth. But when that volatility, the uncertainty, became apparent, buyers bought less forward, they took less risk, and we saw growth levels fall away. So price volatility is the key factor. And that might be especially so in a time of surplus. It's quite difficult to make any comments about the impact of a surplus, mainly because we haven't seen that for many, many years. You've got to go back nearly 20 years till you find a period of a significant surplus of supply over demand in the cashew sector. What do these price trends suggest for 2024? Well, I think basics. Steady growth in India is likely to continue. If prices rise, we will probably see a reaction in the rest of Asia. If prices rise, particularly if they start to rise sharply, as unlikely as that might be, but I think then we will see a slowing in growth. I think we'll continue to see steady growth in Europe. As I was saying, the underlying support in Europe is beyond price. The underlying support is in strong trends of consumption, natural foods, sustainability, changes in dietary habits, healthy eating. These are very, very strong trends. And as this shock of inflation starts to ease, I think we're going to maintain the steady growth. We saw the start of that last year. We've seen the beginning of that in the first quarter this year. I still think we're going to see only a slow return to growth in North America. We are seeing a lot of different products launched in North America at the moment, but they haven't bitten in to consumers yet. So I think this slow return to growth in North America is likely. Perhaps we're seeing more forward inquiries now, but that doesn't mean that we're going to see a major return to growth. Now, maybe those figures of the first quarter will be maintained, but we'll know by the end of the second quarter if those early figures were related to accelerated shipments as much as to additional demand. And finally, we can probably say that the price moving up, which has been happening and seems likely to continue based on our analysis, that it's unlikely to impact demand trends significantly. In other words, there's room for the market to move up $2.60, $2.70, maybe even $2.80 for WW320s. And if it does, that's unlikely to impact demand in any significant fashion during 2024. You also tend to find that when prices are low early in the year, people make their decisions, and therefore the impact of rising prices through the year is often not really felt until the last quarter and into the first and second quarter of the following year. I'm not saying I expect prices to rise sharply. I do expect kernels prices to rise. I think there's probably another 10 to 15 cents, quite possible. If there were a crop problem somewhere that we're not yet aware of or that hasn't yet become apparent, that all bets are off. But for now, I would still expect steady rise in kernels prices in the course of the year. So we've been looking at the harvest, we've been looking at the relationship between demand and prices and how that impacts differently in different markets. Our third segment today is our country snapshot. So we're going to take a look today at Benin. And you can see Benin, if you're not familiar with West Africa, you can see Benin highlighted in yellow in amongst all of those cashew producing countries where about half the world's cashews grow in this region. And Benin is one of those countries. Benin is quite a small country, a country of 14 million people. It's got an area of about 115,000 square kilometers. That is about the same size. If you're in Asia, you might think of South Korea. If you're in Europe, it's about the same size as Bulgaria. If you're in North America, Benin is about the same size in area as the state of Arizona. That just to give you some rough idea of the land area we're talking about. Capital, Porto Novo. The government is a republic. And Benin is a country in which you can do business, although it has its problems. Let's have a look at production. I was lucky enough to do quite a bit of work in Benin over the last 5 years, working with organizations like the ACA, of course, with Benin Caju, and with some government ministries. This allowed us to develop some production models and some forecasts for Benin. So you can see, first of all, that production has been rising, and according to the forecast, although we expect a dip in production this year, as I mentioned earlier, you can see production is rising. Benin is about 9th in the world in terms of production and 6th in Africa. Let's have a look at how production in Benin has grown in recent years. So if we look at the period, the 10 years up to 2023, overall production growth was about 5% every year. Steady growth, fast growth really. But then we've seen an acceleration since 2019. So we've seen growth increased. But let's assume that returns, and that will mean production will exceed 300,000 tons by the time we get to 2030. Very positive indeed. So if other countries don't move forward, of course they will, but if other countries don't move forward, Benin would probably move up to 5th in Africa, 7th or 8th in the world in that event. But other places are growing too. All of this data is based on information from the African Cashew Alliance, mainly from Benin Caju, which was drawn from ministries and a lot of discussions with processors and traders in the country, and also from ComCashew, always a good source of information and analysis. Let's have a look a little bit closely at the production and quality in Benin. So key issue for productivity is yield, on-farm yield. And you can see that right across West Africa, Benin ranks pretty low compared to other countries. So with outturn rates below 250, now these are 2019 figures, they are a little bit old, but at that time, yield levels were pretty low. And it would be interesting to see if someone does another survey in Benin, if that's improved. So the main constraints to production in the country are these low yields, a lack of available planting materials, seedlings in other words. So like most places in West Africa, new cashew trees are cultivated from seeds, usually local seeds. Farmer education, in other words, technical education on how to manage trees, how to plant them, and how to look after them. And there is a lack of improved varieties. Now, all of this adds up to the fact that mostly increases in production are going on, like elsewhere, through extension, more trees on more land, with some improvement in yields. And in the longer term, there is work going on in improving varieties and making those available. Now, the key thing is there are many, many countries that have improved varieties, but very few countries that have efficient distribution systems for those varieties. So the growth is likely to reach 300,000 tonnes on what we know now, but it does need some work by the government and others to make sure that these trends are continued. Most Benin RCN goes to India, and the reason for that is about quality. So if we look and try and locate the quality of the better quality Benin RCN, we find it to be the 7th in outturn in the world, 5th in size, 5th ranking in size, but 2nd in color. And taste is also very important. Timing is good, earlier crops usually, perhaps not this year, but usually, and it's an ideal product for processing, and it is highly sought after by Indian buyers. According to friends in India, probably the most sought after origin for raw cashew nuts is Benin raw cashew nuts. So the export ban that I mentioned earlier has an impact in more ways than simply just volume. It takes a lot of quality product out of circulation, especially for Indian buyers. Let's have a look at the raw cashew nut trade in Benin. So first of all, locate the country, look at those countries around it. Nigeria, quite a big producer. Togo, an exporter and producer. Burkina to the north, landlocked. And Ghana, increasing its production year on year. If we look at the ports in the region, 3 ports, which means options for traders and exporters. The port in Benin is Cotonou. In Nigeria, close by, you've got Lagos. And of course, in Togo, you have Lomé. And this is what tends to happen. Because of the export ban, and sometimes not because of the export ban, simply because of the quality, but at the moment, because of the export ban, product is flowing mostly into Togo, but also into Nigeria. So you have product entering from the north, you have the national crop, and then you have products leaving, at the moment going to processors, later probably leaving through Cotonou, but in the meantime, and surely throughout last year, going to Togo and to a certain extent to Nigeria. Let's have a look at that. So a good indicator, they call this mirror data. So we looked at Indian imports. And we looked at Indian imports from Benin, and we looked at Indian imports from Togo. And what we see is that in 2022 and 2023, imports from Benin declined and imports from Togo exploded. Direct imports from one fell and from the other rose. What happened in that period? What happened in that period was the export ban. So it is pushing cross-border trade, and that has an impact. Also interesting to note, when you look at the total imports from India and Vietnam with Benin origin on them, you find that they are greater, and I mean much greater, than the actual total production of Benin. So clearly there is some form of relabeling going on. Clearly there is some form of change of origin somewhere along the way, because even if the estimates of production were low, they're not so low as to reflect the actual import figures. So there is something going on, not only in the cross-border trade, but also in claiming origin of a premium source, i.e. Benin, at destination. So what's happened in this RCN trade is that the early season spiral in prices has slowed down a lot. It's not like it was when Indian buyers would come in and chase everything that was available early in the year. They can't do that at the moment. But that the export ban has at the same time pushed the cross-border trade volume upwards, and that's resulted in this increase in the volume from Togo into India and a decrease in the volume directly from Benin into India. That results in a loss of revenue for the government, a loss of opportunity for business people in Benin, but it may have supported the farm gate price, because we're going to have a look at the moment at processing, and you'll see what I mean when I say the illegal export trade supported the farm gate price. So we'll have a look at cashew processing. Now, there are some really great processors in Benin, and they produce some really great cashew kernels. Here are some of the examples. I think of most of the factories. You have a factory like Tularo Global. Tularo's making a fine quality cashew kernel, packing it and exporting it for marketing abroad. A really good example. You have factories like Donga Cashew making Donga Treasure, a retail product for distribution in the country, hoping to grow later. You've long established Afocantan with European partners, been doing a good job for many years in very difficult circumstances. And then you have Fludor, a really pioneering factory, let's say more conventional than these northern factories, Fludor, ETG, and Africa Negos in the south. And then in the new industrial zone, you have big volume processors being developed to process the crop, and they need an export ban in order to be able to source enough product without having to compete with the export market. So let's have a look at the processing capacity and its forecast as the GDIZ starts to build. Now, I have a pretty conservative estimate on how the GDIZ will perform. I'm estimating that it will peak out around about 80, maybe 90,000 tons of processing. But this is what it would do. It would build processing capacity to something like 130,000 tons, 125, 130,000 tons in the country. Meantime, production, as we were saying, is likely to hit 300,000 tons. So the country would still need to attract and maybe double the planned and existing capacity in order to match the crop. How an export ban fits with that is very difficult for me to understand. How like at the moment where there is a window followed by export under license, that can make sense, but only if you can enforce the ban during the time of year when the processors are seeking to buy. If people invest, they should have access to supply. But farmers also need reasonable prices, so there has to be a balance found. And that balance is distorted by the cross-border trade. Now, in the country, processors have always struggled with this problem. They've struggled with the competition for RCN due to its quality and the preference in India. They've struggled with high costs. Let me give you an example. The high cost of electricity, important for processing cashews, but also the high cost of accessing supply and long waits for supply for electricity. This has also been a problem. And one of the key things, whereas to a certain extent costs are something that processors find difficult to manage, one thing they could do is they could integrate the supply chain. And so far, we really, with exceptions, maybe Tularo is an exception, but we haven't seen this development of supply chain integration where the processors link themselves to farmers and farmer groups. The relationships tend to be a little bit more adversarial than that. So when we look at it, we see that the ban on exports, which now is during the window, but was planned or may still be planned to be a permanent full-time ban on export of RCN, it should help processors. Now that's distorted early in the 2024 season because the cross-border trade is keeping farm gate prices higher than they otherwise would be, meaning that the impact on processors is reduced. So the export ban would help processors, but because there's not enough processing to process a large proportion of the crop, early season RCN prices would drop. Perhaps they'll increase later in the year when export competition would kick in. But for that to happen, you'd need an infrastructure in which to carry the raw nuts. So in the absence of that, you get the cross-border trade. And that's the key feature right now. Key issue then would be the enforcement of that export ban, whether it be in the window or throughout the season. So some key points on Benin. Production is increasing and increasing very well. The export ban is an innovative policy measure, but it's very difficult, very, very difficult to implement and very difficult to enforce. And it's good to see that there have been some what we might call transitional arrangements been put in place this year. How that'll pan out in the future remains to be seen, but it needs to be managed with caution. And finally, processing will increase, but based on the trends that we're seeing right now, it'll fall short of the kind of targets that have been mentioned by the government in their outline for the cashew sector in the future. The idea of processing 300,000 tonnes by 2030 seems to me completely out of the question. On what we know now, I hope I'm wrong. So that's a quick snapshot of Benin. Next time we'll do a snapshot of Nigeria, which will also be interesting, I hope. So we'll move on to our final section, which is our sustainability section. We've talked about production, we've talked about markets, we've had a quick analysis of demand and prices, our snapshot of being on Benin, and we're going to finish with a look at, under the theme sustainable cashews from Africa, we're going to have a look at organic cashews. And we're going to ask the question, is organic the answer? So why are we looking at organic right now? Well, there's a number of factors at play. Firstly, African producers can meet organic standards. The basics are there that they can meet organic standards. That would improve livelihoods through higher prices. Secondly, demand for organic products is making a comeback after a very poor 2022 and 2023 period. Organic agriculture is sustainable. In fact, as I learned this week, it's a complete sustainability system if it's completely adhered to. It's part of the policy in some regions, so it opens doors in certain markets. The European Union has a target of 25% organic agriculture by 2030. I'm not sure how likely that is to be achieved, but it is the target. There have been some concerned authorities in Vietnam who have pointed out that some of the organic certificates are not authentic and that that's undermining Vietnamese suppliers. It's a problem for them, which I'm sure they'll fix, but it's an opportunity for suppliers from other countries, especially from African countries. And it turns out that the key markets where organic is important, particularly Western Europe and the United States, these are also markets where African processors already have certain competitive and permanent advantages: location, journey time, and so on. So that's why we're looking at organic. What is organic production? It's probably a little bit more complex than we think. It is a method of production. It avoids the use of chemicals. It has regulated standards, and critically, it is controlled and certified. It's not organic unless it's certified. And there is a labeling scheme in many markets where certified organic products are labeled as such, and consumers can see exactly what they're buying. Sometimes it's important to ask, what is something not? So let's ask, what is organic? What is it not? Well, first of all, it's not just testing for the presence or absence of chemicals. It's not organic by default. So you cannot say that cashew nuts are organic simply because chemicals aren't used in production, for example. It's not suitable for opportunistic trading. It's not suitable for identifying opportunity for quick price premiums, call it organic, ratchet up the price. And finally, it's not easy. It needs certification, it needs organization of farmers, it needs segregation of product. So it is really important to identify what it's not as well as what it is, because we see a lot of discussion about fallacies like organic by default, people simply testing for presence of chemicals and then issuing their own organic certificates. And that was one of the key things that those Vietnamese authorities focused in on in that article that I showed you last time on the GME. There is a price premium for organic. What is it? And why is there a price premium? The premium is around 25%. Now, it does tend to vary. Particularly when demand was poor, that premium tended to come under pressure, but it should be in or around this level. It should be at least partially passed on to farmers. The concept of the premium is that, in concept, organic production means lower yields. Now, that may not be so on cashews in Africa. As we've just spoken, for example, about Benin, already cashews are produced at fairly low yields, so converting over to organic production methods might actually, because it does involve a lot of training of farmers, might actually improve yields. And this in itself is an opportunity. Trading in a market that offers a premium without any impact on yield adds the 25% onto the bottom line of the chain, and some of that must be passed on to farmers. It involves record keeping, better record keeping, in some cases the evolution of record keeping, the introduction of record keeping, the use of natural fertilizers, which may or may not be available, and chemical-free pest control, which may mean more labor, may mean using innovative methods, of which there are plenty. And there is, of course, a cost of certification. And that is borne, it can be borne by the farmers or by the supply chain or by cooperatives, but that cost is there and it needs to be renewed regularly. So there is a price premium, but it's not just a free bonus. There's a lot of reasons for that price premium to exist, but it may well be in a segment like cashews in Africa, where yields are already low, where there is a low use of chemicals in production in any case, it might be an ideal opportunity. What about demand? So why are organic foods in demand? Well, nothing particularly unusual in this. The healthy lifestyle and natural food has become a trend from North America, India, China, you name it. This is a trend worldwide. Secondly, the concern for the environment and the impact of so-called modern agriculture on the environment. The opportunity to buy in a verified, independent food claims. So people, put that more simply, people tend to trust organic foods more. People who buy organic food tend to trust it more. And finally, there is a greater interest in the story behind food now. Now that would apply to conventional, organic, all kinds of food products. But it's easier, more accessible within the organic chain, which is, of course, by the way, usually fully traceable too. And the fact is, as we mentioned, consumers are prepared to pay for these. Now, when you look at those things, I think you also ought to consider how well does that fit with the current World Market Organization. 3 million tons of raw cashew nuts shipped around the world every year to be re-exported as kernels. How does that fit with concern for the environment? How does it fit with verified independent food claims? How does it fit with the interest in the story behind the food? The answer is it doesn't. So when we look at organic foods and the reasons for demand, we also need to look at local supply chains, origin-based processing. Quick look at organic suppliers. Where are they? Well, there are some major suppliers, some major packing centers in Vietnam. There's potential for some in Cambodia too. There are, as I've mentioned, questions around some of the certification. In India, it has been growing. High quality, small processors would be generally the rule in India. Some of these people produced really excellent cashews, organic certified excellent cashews, but generally low volume supply chains. In African countries, Cote d'Ivoire has Olam, has Cashew Coast, maybe one or two others. Benin has Tolaro, organic Benin, small operations. Burkina Faso has Anatrans, Gabana, Waka. Again, making good quality products, organic certified in difficult circumstances. But you can see it's not mounting up to huge volumes. Even if we look in Brazil, the volume has basically disappeared as the crop has reduced. So very limited supply. Let's have a quick look at the consumption. If we look in Europe, estimates 6,000 to 8,000 tons, about 4 to 6% of the market. It was growing quickly up to 2022. It's contracted a little bit, seems to be making a comeback now. Main areas: Western Europe, North America, Japan, Korea, and then throughout Asian consuming countries and Eastern European consuming countries, but just at a much lower level. In India, it has really high potential, I think. The organic segment in India is expected to grow by 22% per annum. Share is very low, much lower than it is in Europe, for example, at 4 to 6%. And what needs to be really considered here is what would happen if Indian consumers went for organic cashews in a big way. A 5% share of the Indian market would have a huge impact on supply, and in fact it wouldn't be met. So we have a problem in that sense. China, again, nut sales growing, impressive increase in cashew sales last year. Organic is also growing more slowly. It seems likely to grow, and supply sources at the moment Vietnam, but also likely to be Cambodia and Myanmar in the future. Again, the problem is if demand takes off in China, will supply be able to meet it? And North America, probably the biggest market. Now I say probably because, and I don't like using probably as a word in this context, we don't have independent statistics on cashew trade on organic cashews because they are shipped under the same HS codes as all other cashews. So we have to make estimates. Our estimates are based on some detailed research in Europe, some conversations in North America, and following correspondence in China and India. In North America, biggest market, growing very quickly up to 2022, stopped dead for the first time ever. 2022 saw low levels of organic growth, and in Germany, for example, the first time in history, organic demand actually fell. First time in history, 2022. Organic food has been going since the 1970s. One of the reasons was that consumers had a perception that organic was high priced, but because the organic supply chain is less exposed to price volatility, that often isn't the case. So there are certain constraints to market growth in the organic sector, and we need to be cautious. If people see organic as the answer, we need to be really cautious about that. There is limited supply, and it has the reputation of being a little bit erratic or unreliable. Sometimes people sell in the conventional chain, sometimes there are problems, sometimes they're very small processors anyway. The quality is perceived as unreliable, which is unfair, I think, but it does mean that there's an opportunity for larger scale suppliers of organic products of consistent quality to supply supermarkets who will be looking for guaranteed volumes. So it might seem like an easy fix, but it is not at all an easy fix. This is not something that people should rush into without really considering the impact of it. Can it work? Well, okay. Let's look at that for Africa. First of all, no problem with the availability of raw cashew nuts, low use of chemicals. There probably is a basis for certification there. But there's a huge difficulty and a huge cost of organizing and training smallholders in an unregulated chain with certain unenforceable regulations, as we've been discussing. Mixing can happen, deliberate or otherwise. It can happen, and that can spoil a reputation. On the other hand, organic farmers can make premiums, and it can make the processors more competitive in sourcing the raw nuts. It supports closer relationships with growers. In the organic chain, you have to work together. There's certification, there's record keeping, there's organization. You must work together, and that fosters closer relationships. And there is technical support available. So we could say, answering the question, can organic production work? And we mean in African countries. It can make some processors more competitive. The basics may already be in place. But it's complex. It needs investment, and a lot of investment. Putting the right supply chains in place is costly and time consuming. It's simply not for everyone. So is organic the answer? For some, but probably not for most people. So rushing into organic or making organic a national policy is probably not viable in the immediate future. My key conclusions then on the organic supply chain in the context of African cashew sustainability. Firstly, if organic consumption returns to growth as it's forecast, eventually a shortage will emerge. That may not be good news. A shortage doesn't necessarily mean a bonanza for everybody involved. A shortage can equally mean that supermarkets drop the product as pay more for it. So a shortage is not necessarily good news. African producers are suitable for certification. But if you don't already have the linkage to the producers as a processor, there's really very little chance of doing that quickly. You have to build the linkages first before you can offer the certification. And thirdly, there is a certain risk involved. Abuses in certification in some countries, as I've mentioned, have the potential to undermine the system. And some of these abuses are perpetrated by major suppliers. So that means that the risk or the possibility of a significant undermining of the system and thus an erosion of the premiums is there. So it's not without risk. So in answer to the question, is organic the answer? It may be for some people. It's certainly not for every region. It's certainly not for every country as a national policy, but it can work for some. If you've got a good process with linkage to producers and producers that are open to support and open to cooperation, which means they must be organized, then there may be an opportunity. But it's absolutely not the solution for sustainability. We need to work on all the other things. So we've talked about the harvest and the crop. We've talked about markets and prices. We've had a look at the relationship between demand growth and prices. We had a look at Benin in our country profile, and we've talked about organic cashews. That's it from me. Thank you very much. A little bit longer than normal today because we took on quite a lot of content, but thank you for attending, and I'll pass you back to Ernest. Ernest.
Thank you so much, Jim Fitzpatrick. and thanks for the content. You've really taken us to the prices and the relationship with the demand. We've also talked about country focus, particularly Benin, and then also organic cashew production. That is for me very important. Now is the time for the Q&A, and I will ask the